Tariffs of 104% on China. I mean, the White House is really piling the pressure on Beijing right now.
It's been another bad day for US stocks, with markets dropping again on Tuesday amid uncertainty caused by US President Donald Trump's sweeping.
This one move by China could end the dollar's reign and reshape the world as we know it. The United States, once the undisputed king of global supply chains, is reeling, and the culprit lies across the Pacific: China. The world's manufacturing titan has tightened its grip, slashing exports, pulling capital, and dismantling the economic supremacy America took for granted. Worse still, there's no backup plan. Let's set the stage. 2018. Donald Trump, riding the wave of Make America Great Again, declared war, not with tanks, but with tariffs. The US slapped 25% duties on $200 billion of Chinese goods, targeting everything from steel to electronics, promising to resurrect American manufacturing and cut reliance on Beijing. The pitch was simple: force China to its knees, bring jobs home, and reassert US dominance. But this wasn't a victory lap. It was the match that lit a wildfire America couldn't control. China didn't flinch. It hit back with precision, targeting US exports like soybeans and cars. But the real blow came later: a slow, deliberate strangulation of supply chains. By 2024, US imports from China had plummeted 20%, according to the US Census Bureau, a drop engineered by Beijing to expose America's vulnerability. Think about it. China controls over 90% of rare earth minerals, per the US Geological Survey, elements critical for smartphones, fighter jets, and wind turbines. Electric vehicle batteries? 80% of global lithium-ion battery production is tied to Chinese supply chains, per the International Energy Agency. When Beijing tightens the faucet, America doesn't just stutter, it stalls. The fallout's brutal. The Peterson Institute for International Economics estimates Trump's tariffs have cost US households an extra $22,000 annually by 2025, factoring in higher prices and disrupted goods. That's not abstract. It's the difference between sending a kid to college or keeping the lights on. Manufacturing didn't roar back either. The Bureau of Labor Statistics pegs its GDP share at 11.2% in 2024, a measly bump from 10.8% in 2016. Jobs stayed overseas, but costs soared here. And China? It's not just playing defense. Since 2020, it's slashed its US Treasury bond holdings by 15%, from $1.3 trillion to $759 billion, per the US Treasury Department. Translation: Beijing's done financing America's $35 trillion debt binge. This isn't chaos. It's a calculated middle finger. Trump sold tariffs as patriotism, but they've become a boomerang, smashing the illusion of US self-sufficiency. The trade war was meant to weaken China. Instead, it handed Beijing the playbook to exploit America's Achilles heel: its addiction to cheap imports and foreign capital. The spark of 2018 didn't reignite American greatness. It exposed a nation unprepared for the counterpunch. While America scrambles to plug the holes from its trade war blunder, a new player's stepping into the ring, and it's not messing around. BRICS, Brazil, Russia, India, China, and South Africa, isn't just an acronym anymore. It's a sledgehammer aimed at the US-led financial order. Once scoffed at as a ragtag crew of emerging economies, it's now a juggernaut with a mission: dismantle the dollar's chokehold on the world. The 2024 BRICS summit in Kazan, Russia, wasn't a photo op. It was a declaration of war on Washington's rules. Nearly 80% of global oil trades in 2023 bypassed the dollar, per the International Energy Agency, a tectonic shift from its iron grip on energy markets. Saudi Arabia, a US ally since the 1970s petrodollar pact, now invoices oil in yuan. Iran's pumping crude for rupees. This isn't random. It's BRICS flexing, replacing SWIFT with blockchain and the dollar with gold. Central banks bought 1,037 tons of gold in 2024, the highest since 1950, per the World Gold Council. Why? Gold's untouchable. No one can print it, sanction it, or manipulate it like the Fed does with dollars. Then there's the wild card: Cuba. In 2024, after 60 years of U.S. sanctions, Cuba joined BRICS Plus, a move dripping with symbolism and strategy. For Havana, it's a lifeline, access to BRICS loans, trade, and a financial system beyond America's reach. For the world, it's a flare. The U.S.'s Latin American backyard is no longer its playground. Brazil's pushing yuan-based deals with China. Argentina's eyeing BRICS membership. This is a crack in Washington's hemisphere, and it's widening. The numbers don't lie. The dollar's share of global reserves slid from 71% in 1999 to 58% in 2023, per the IMF, and BRICS is accelerating the bleed. Russia's gold reserves jumped 25% since 2020, per the Central Bank of Russia. India's RuPay system now handles 60% of its domestic payments, per the Reserve Bank of India. BRICS isn't dreaming of a new order. They're building it, brick by brick. They've got the resources, China's rare earths, Russia's oil, India's tech, and the will to defy a fading superpower. This isn't a rebellion. It's a revolution, and America's on the wrong side of history. Let's zoom out. The US dollar's reign as the world's financial kingpin is crumbling, and it's not an accident. In 1999, it made up 71% of global foreign exchange reserves, per the IMF. By 2023, that's 58%, and Bloomberg Economics warns it could dip below 50% by 2023-2030 if the trend holds. Why? Because BRICS and its allies are sick of dancing to Washington's tune. This is de-dollarization in real time, and it's picking up speed. Oil's the canary in the coal mine. In 2023, 19.8% of global oil trades ditched the dollar, per the IEA, a stat unthinkable a decade ago when the USD was energy's undisputed currency. The UAE's trading in euros, Venezuela's taking yuan, even OPEC's diversifying. Why cling to a dollar tied to a nation drowning in $35 trillion of debt? That's the US Treasury's 2025 figure, up $5 trillion since 2020. Meanwhile, China's digital yuan processed $870 billion in transactions by December 2024, per the People's Bank of China, a blockchain-powered jab at SWIFT's dominance. Speaking of SWIFT, it's losing its edge. BRICS is rolling out a cross-border payment system, gold-backed, blockchain-driven, and dollar-free. Russia and Iran already bypassed SWIFT for bilateral trade. India's UPI system processed $2 trillion domestically in 2024, per the National Payments Corporation of India. This isn't theory, it's practice. The US's sanction weapon, once a financial nuke, is rusting. When Venezuela can sell oil without touching dollars or Cuba taps BRICS funds, America's leverage fades. The Fed's scrambling. Treasury Secretary Janet Yellen admitted in a 2024 Senate hearing that de-dollarization threatens our ability to shape global outcomes. Too late. The dollar's soft power, printing money without consequence, is dying. In 2020, the US pumped $6 trillion into COVID relief, bloating the money supply by 25%, per the Federal Reserve. Inflation's no longer transitory. It's 4.5% in 2025, triple pre-pandemic levels. BRICS smells blood. Russia's gold reserves hit 2,500 tons. China's hoarding rare earths. India's pushing rupee swaps. This isn't a shift. It's a seismic break, and America's running out of moves. Now let's bring it home. China's export squeeze is gutting America's supply chains. Imports dropped 20% in 2024, per the Commerce Department. Rare earths for solar panels and turbines? China controls 92% of the market, per USGS. EV batteries? 80% of production hinges on Chinese lithium and cobalt, per the IEA. Biden's green revolution is choking. Bloomberg projects a 30% delay in EV rollout by 2027 if Beijing cuts deeper. This isn't a glitch, it's a chokehold. Consumers are the punching bag. The Peterson Institute forecasts an extra $22,000 in annual household costs by 2026. Think groceries up 15%, medicine doubled, car loans stretched thin. That's not a number. It's a family skipping meals or a senior rationing pills. China's not just holding back goods. It's dumping US debt. Treasury holdings fell $300 billion since 2020, per the Treasury Department. No buyers force the Fed into a corner, hike rates and crash the economy, or print more and torch the dollar's value. Inflation's locked at 4.5% in 2025, per Fed projections. Goodbye, cheap borrowing. Jobs? Trump's manufacturing renaissance is a mirage. Factory output's share of GDP crept from 10.8% in 2016 to 11.2% in 2024, per BLS, hardly a comeback. Meanwhile, U.S. dependence on Chinese imports rose 10% in value since 2018, per census data, despite tariffs. The plan to decouple flopped. America's still hooked, but now the dealer's raising prices. This is the tariff legacy. Not strength, but scarcity and sticker shock. Just when you thought the trade war couldn't get uglier, Trump dropped a new bombshell. On April 8, 2025, he announced that the U.S. will soon slap major tariffs on pharmaceutical imports, a move he claims will force drug companies to bring manufacturing back home. This isn't a bluff. It's the latest escalation in a tit-for-tat spiral with China and the world, and it's about to hit Americans where it hurts most, their medicine cabinets. Let's break it down. Pharma's been a sacred cow in past trade wars, largely spared while steel, cars, and tech took the hits. Not anymore. Trump's pitching this as a national security play, arguing that relying on foreign drugs leaves the U.S. exposed in a crisis. He's not wrong about the dependence. The U.S. imports 80% of its active pharmaceutical ingredients, with China supplying 13% directly and influencing far more through global supply chains, per the FDA. But here's the rub. This tariff isn't a magic wand. It's a sledgehammer. Drug makers aren't packing up and moving to Ohio overnight. They're lobbying for a phased rollout, begging for time to retool because shifting production takes years, not months. China's not sitting idle. Beijing's already retaliated with 34% tariffs on U.S. goods last week, and Trump's vowed to jack up Chinese import duties by another 50% if they don't back down. That's on top of the 104% tariffs set to kick in after midnight on April 9, 2025, per the administration's latest salvo. This isn't a negotiation, it's a game of economic chicken. China's defiance is clear. They've called it blackmail and promised to fight to the end. Meanwhile, U.S. consumers are collateral damage. Analysts estimate these pharma tariffs could spike drug prices by 20 to 30% within a year, hitting everything from antibiotics to cancer meds. That $22,000 extra cost per household we mentioned? Add another few grand if your family's on prescriptions. The ripple effect's brutal. Global supply chains are already a mess. 80% of U.S. penicillin comes from abroad, and China's a key player in generics. Cut that off, and shortages loom. Trump's betting on patriotism to sell this, but the reality's grim. Pharma giants like Pfizer and Johnson & Johnson, with plants in Ireland and beyond, face a profit squeeze, and they'll pass it on to you. The White House says it's about resetting the table for American industry. What it's really resetting is your budget, and not in a good way. While Trump swings his tariff hammer, the world's punching back, and Wall Street's taking the bruises. On April 8, 2025, U.S. stocks tanked for the fourth straight day, with the S&P 500 dipping below 5,000 for the first time in nearly a year. S&P 500 companies have bled $5.8 trillion in value since Trump's tariff spree began last week, the worst four-day drop since the index's inception, per LCG data. This isn't a hiccup, it's a meltdown, and it's global. Why the carnage? Trump's 104% tariffs on China, effective post-midnight April 9, 2025, lit the fuse. China's 34% counter tariffs last week were the spark. Trump's promise of a 50% hike if Beijing doesn't blink poured gas on the fire. Global markets convulsed. Europe's Stoxx 600 slid 2.6%. Japan's Nikkei and South Korea's Kospi cratered, all reeling from the pharma tariff news and the broader trade war escalation. Investors aren't buying Trump's beautiful picture at the end spiel. They're fleeing to gold and bonds, with gold hitting record highs and U.S. 10-year Treasury yields dropping as safe havens surge. The world's not just watching, it's reacting. The EU's prepping 25% counter tariffs on US goods, prioritizing talks but ready to strike. Canada's matched Trump's 25% auto tariffs with its own, targeting non-USMCA vehicles. Even allies like Japan and South Korea are sidelined as the White House focuses on priority partners, leaving global trade in chaos. The IMF's Kristalina Georgieva warned this week that these tariffs represent a significant risk to the global outlook, predicting sluggish growth and higher inflation. She's not wrong. JP Morgan now forecasts a 0.3% US GDP decline for 2025, a stark reversal from their earlier 1.3% growth prediction. Back home, the pain's immediate. The S&P 500's 18.9% off its February peak, teetering on bear market territory. Billionaire Bill Ackman, a Trump backer, flipped script, warning of an economic nuclear winter unless he pauses. Consumers face a double whammy: higher prices from tariffs and a battered stock market shredding retirement accounts. Trump's team, Commerce Secretary Howard Lutnick and Trade Advisor Jameson Greer, insist this is a reordering of global trade. What it's really reordering is the world's faith in America's economic leadership. The dollar's weakening, allies are hedging, and China's digging in. This isn't dominance, it's desperation, and the markets know it. This isn't a blip, it's a reckoning. China doesn't need to fire a shot, it just stops selling, and America buckles. BRICS isn't waiting for permission. They're forging a world where the dollar's a relic, replaced by gold, tech, and unity among the once marginalized. The US has no counterpunch. Sanctions backfired, tariffs flopped, and SWIFT's a rusty tool. The numbers scream it. 58% of reserves in 2023, down from 71% in 1999. Oil trades, bond sales, payment systems, all slipping from US grasp. If BRICS swells, Latin America, Africa, Southeast Asia joining the fold, Trump's greatness becomes the day America lost the reins. This is the new order: de-dollarized, decentralized, and defiant. The question isn't if America can hold on, it's how long until it realizes the game's already over.